Yet another lesson was learned on Wall Street yesterday. And no, I'm not talking about the meme stocks. I'm talking about the PPI data. Well, the PPI data was hot, but the revisions were not. Kind of like when you beat with earnings, but lower guidance. Kind of the opposite effect. We'll see what happens with that CPI 835. None other than Blue Putnam joining us to break down those numbers in the way that nobody else can. It's Wednesday, CPI day on pre-market prep.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, team, starting out a little bit in the green, up 1 3/4 handles, tight range overnight, kind of in no man's land as far as resistance goes. Buck in the red by 16 cents, 104.73. TLT Perky, we've had a couple day rally here, up 37 cents at 91.23. Crude with a 77 handle, down 52 cents. I better recheck that quote. Crude, then we got the crude, the gold up 750 at 23.67.40. Silver in the green over 29. That's nice. 31 cents at 29.02. And Bitcoin just finding a home here in the lower 60,000 handle. This would be the futures. They're up $870. It's 62,705. Let's bring in a happy but groggy Triple T.
Oh yeah, these Oilers games being on this late at night is just killing me. I'm losing years on my life here, and they're stressful as well because they're nail biters. And Vancouver ties it with a minute and a half to go. I'm like, oh my gosh, and just like so depressed on that goal. But then 40 seconds later, Bouchard scores for the win. It was like a wild, emotional roller coaster. Bring AB in here. He likes talking the sports. We don't like to miss AB on the sports talk because eventually AB is going to be on sports radio because he likes the sports.
You think so? You think
I
he's
don't.
going to be
I think
testing?
we're going to start. I think what we're going to do is we're going to start a second show, and it's going to be me, AB, and you, Joel, and it's going to be the sports show for Benzinga. So we're obviously.
I like that.
I think we're going to have two shows. We're going to have stocks show and sports show, and then they don't have to collide all the time because the stock traders hate this. There's half the chat that likes sports, and half the chat's like, stop talking sports, and especially hockey. We're not in Canada. We don't care about Canadian
hockey,
city.
Yeah.
Let's get out of here. So anyways, that's the only talk. Okay.
One final thing about AB and his sports acumen is he has pretty good history. I don't know where he got it, but like he pulls out stuff like from the olden days. I don't know if he read books. I mean, no one reads books anymore, but like he brings out some baseball. Is it baseball statistics that he comes out with that are pretty amazing that even impress me. But where do you want to start today, Dennis? You want to start talking about the overall markets, or you want to talk about the
We'll
price
talk
action?
that CPI revision stuff in a bit. We've got to start with the meme trade here because we got meme implosion across the board. Joel with the call that eventually they're going to do an offering. We kind of all knew this was eventually going to happen. It took them a couple days, but AMC comes out and is indeed doing a share offering, and that is your catalyst for the big whoosh down. It was up last night, trading over 850, and that rug has been officially pulled. AB, what is the news? Sounds like a little dilution in store, and Adam Aaron is predictable.
So AMC announced privately negotiated exchange agreements for over 23 million shares of Class A common stock, getting back about $163 million. So, we talked about this, that like if you're AMC, right, and you're a struggling company, I mean, we had the company report earnings a few weeks ago, and your stock goes up that much in a few days, right? It's pretty predictable that they may do an offering. We had the planned offering that had already been announced yesterday, and they had kind of, it was on the low end. So once the stock went up a little bit, it made sense for them to do another offering. So AMC this morning trading down about 50 cents. I mean, it's only down about 7.5%. But it could be just one of those things where psychologically people see that red this morning and then they're like, oh, well, the story's over. I'm not buying it. And that could be, bad news very quickly for these meme stocks that have been running?
So many things to talk about. Obviously, the big move yesterday. We said on this show, sell your peanuts while the circus is in town. I don't know where these things are going to top out, but when a stock goes like GameStop from $12 up to $62, like we said yesterday, the elephants are standing on balls. They're tossing, the peanuts are all sell the peanuts. Sell the peanuts. That's what had to happen yesterday. I don't know where you sold, if you sold yesterday, but I mean, for the most part, most of the memes are imploding. There's FFIE, which is still continuing here, which was a small 6-cent stock. That was the leader on the high short interest board, so that one worked. But GME is obviously selling off with the AMC here this morning. AMC hit yesterday as high as over $11.88. It's quickly been cut in half. So in one day, half of those gains basically gone. Is there going to be buyers? Is this trade officially over? Probably not over. There's going to be some bounces. Is the high in though? Are we seeing 1188 again? I highly doubt it. Are we seeing the high, GME $64 again? I highly doubt it, but we've seen the story. The story can change. Maybe our roaring kitty friend starts to get excited here and starts to try to pump it again. But again, just when you get irrational, or as to quote Alan Greenspan, irrational exuberance, you take some profits.
A couple. I'm not going to do any technicals on these stocks anymore because there aren't any. Right? I mean, basically, there's no. If you have a technical analysis system that's working in this kind of environment, go ahead and use it. But there'll be no technical analysis from me. The only thing, and I'd like to make a trading lesson out of this, there's only one thing that I want to point out to anybody that was active in that stock. I think Dennis knows where I'm going. Off the open. Off the open. Did you guys see where both these stocks opened and what their high of the day was?
They opened right high.
Exact tick.
They
exact tick. 1188.
Yeah.
So let's say you were buying that at 1188. You're like, this thing's going to 20.
To the moon.
Yes, to the moon target. You had to know that you were wrong immediately.
Mm-hmm.
Right? It didn't even tick 89. Right?
Yeah.
Okay. GME.
I didn't even notice that they opened at the high tick.
GME. Okay, let's go to the dailies. What was the opening print? 64.83.
Wow, no heat.
What was the heat? I mean, and who wanted to short it?
Right? You couldn't. I was looking for locates. I honestly, again, just as trading, but I actually was looking for locates. I was trying to short it last night. And I'll have a story for you about that in a second here. But Joel, it's a fantastic point you're making. And, this is something you taught me way back in 1999. The opening is such a big event. It's the mark. It's, when you have volume just going off the rails in the pre-market, that opening is such a big event. And a lot of traders that maybe don't trade pre-market are like, you got to get in. I got to get in. They're seeing it go up. They're like, please open. I got to buy this because it's going to the moon. And then, so you got all that herd mentality that's coming in here on this opening event and no follow through, zero follow through. And then the leak, a little bit chop up, the leak, a little bit chop, the leak, a little bit of come back, the leak. And that's what happened yesterday. And you know what? To your point, we could not get back up all day, on that GME chart. Let's focus on that one. We opened at 64.83. All day, we're fighting with millions of shares trading, but they can't get it back up because the selling pressure is just too high. Bag holders from 2 years ago saying, thank you very much, get me out of here. Can't get out. And then what happens is we actually close at 4 o'clock and they start to lift it after hours. Why can they lift it after hours? Because 90% of the liquidity is gone. So at 4 o'clock, it starts to lift up. And if you look at the after hours chart, it starts to go back up again. So now they can lift it up a bit because a lot of the liquidity is gone. 51, 52, 53, 54, starts to lift up again. You see it all the way there, Joel, looking at it, over 60. They get it back up. Oh, no, sorry. Can you? I'm getting confused. Can you blow it up a little bit more?
Yeah.
We need to see the after hours.
Let me get. This is the after hours right here.
Oh, that is.
Yeah.
So they got this back up over 60 after hours. And then the leak. So it's why, when you're trading after hours, you've got to consider one major point. Liquidity drops by like 90% on every stock, even GME. Even though you see it trading like crazy, way less liquidity. So a few buyers can push it up. But are those prices going to be sustainable when the real liquidity comes in? Probably not. So it gave you another opportunity to get out at 60 or at 62 or 63.
Right here.
But
Yep.
yeah,
Yep. That's the after hours. This is a 9:30 open right here.
and
Boom.
that was the after hours the day before when it got to 80, and I never
Yeah.
saw those prices during the regular session. The
Triple
$80
top.
never got seen.
Oh, and
Yeah.
what do you know? Another lesson here. The old whole number trick. Look at that. On 3 different 15-minute brackets. 80. Boom. 80.
Holy
Boom.
textbook stuff here on this crazy meme.
No technicals. Forget it. Let's move
And
on.
then you know what? These technicals are working here. So here we're going to talk technicals, and they're all telling a story here, folks. They're telling a story. So the story and the lessons learned is, one, don't chase after hours pricing. The ways that I've traded after hours and pre-market, I usually am contrarian and fading ridiculous moves. Not saying you had to come out here and short GME, but I'm definitely not coming in and buying it when the liquidity is lighter. Last night on the after hours session, the same thing occurred. Stock closed at 8 o'clock around 51 GME. Within like 2 minutes, they had it back up to 60 again. You know why? Because the after hours is really thin. It's basically just Robinhood.
After hours.
After hours at 8 o'clock, the Robinhood platform. They had it back up to 60 again, and people are showing, and I even said it's back up at 57. A kind of active market, but the liquidity dropped again way more. So then a few buyers can really push it up, and all those buyers now bag holders. Now, is it over? I don't know. We don't know the path here. We know eventually the stock leaks it back. But we don't know the path. Maybe you get another pop. Maybe there's some more hope here. But lessons learned here is, one, don't chase after hours pricing. Two, sell your peanuts while the circus is in town. The circus was very much in town yesterday.
All right. Well, yeah, I mean, and that's the thing right now is like when we first saw these stocks run in 2021, you had the great story behind it. But if the story now has been kind of played out a little bit, I worry that, on the first red day, how many people that have made money in the past couple of days will start booking those profits. It'll be interesting to see today if GameStop and AMC dip too much. I mean, we're still seeing Roaring Kitty. He's active again on Twitter this morning, already posted, and he's been very, very planned out. His posts have been coming right at the 30-minute mark throughout the market day, and then stops right at 4 p.m. So we'll see if Roaring Kitty can work some of his magic on social media today, because certainly these stocks not getting that much love this morning. Joel,
they're going to keep trying. What happens is they slowly, if they tweet more, they lose their influence. That's what happens. So if he comes out with another stock, if he came out with another stock pick somehow and tweet that, it would really go, because like a small cap stock. I mean, the person, if it really is, some people were speculating that he sold the account and it's not really him behind there anymore. I have no idea about any of that. I don't know Roaring Kitty personally. I'm assuming it's him, but
you're
who
a smart
knows?
guy. You know what? Because you know what? I was thinking. I wasn't thinking that, but I was thinking no, whatever. No room for no time for conspiracy theories here. Let's just move on, because we've covered this a lot. There was someone in the chat yesterday, and I don't know if they were joking. They said that they paid off their mom's house. That's what.
Well, that's awesome. And
so
again,
that's awesome. Those are the stories I want to hear.
Yeah, the problem is going to be more stories that you're not going to hear, that where people chase this thing and they're losing money. So because a lot of people have trouble, knowing ring the register. Again, we're going to tell you ring the register when the circus is in town. Your stock's going up 1,000%. You ring the register. You take the money and run. 1,000% don't just grow on trees. I know Jeremy Newsom got a book, Money Grows on Trees, but 1,000% don't grow on trees. You've got to take the money and run when you get gainers like that and moves like this. So, and when you're bag holding something for 5 years and you get all your money back and you're down 80% on it, it may be not a bad idea to get out to. I know AMC never even got close to that. AMC obviously is significantly off the highs.
That's just a different chart.
It's a different story here. And you know what? Adam Aaron has just pissed all over this stock, with this dumping and dilution and everything else. And, how do they still need money? After all the offerings they've made, how can they still need money? Obviously, very poorly run. This company, sorry, apes, it is. I mean, you need new management in there. You need something figured out. It's a movie theater chain. It's a tough gig. I don't know who wants to go try to run a movie theater chain in 2024. But, it's leaking here too. Is the story over? Probably not. You get some lifts, you get some pops, but I think that $11 on AMC is going to be safe for a while. I also think you're not going to see new highs on GME. Some people saying, we're going to see, new highs on GME today. This hit some people a little bit here. It was $80 after the pre-market that day. It's 44. It's got cut in half. That hits people. And then you got the other memesters, which were all running yesterday morning. Same story. All of them, like we had BYON ran up, the old Bed Bath & Beyond. But, there was other ones like Beyond Meat was going there yesterday. And we had iRobot going. I was trading a couple of these things. There was a list of Cost was another one. KOSS, that's way down. Double B, BlackBerry, it was way up. It's way down. Reddit was even going off this. Robinhood was going off of this. They weren't having the extreme moves there, but they're in their direct benefits to this. SunPower was going. It's a horror story for those people now because they're got a downgrade here today, and it's giving almost the whole damn thing back in one day. So it's this stuff when you're chasing it, it's high risk.
All right, final thing, and then we're going to move on here. But I do like the comment. Chris Wood, he was our Dallas Cowboys analyst on draft day, and boy, did he ever do a great job. He's saying maybe he had to deal with the SEC to stay off social media for a while, and maybe that time period was up, because he couldn't get in any trouble for what he did. So maybe that was part of the deal that he stayed off. But
well, he also waited until GameStop got down to its lowest point in 2 years. I was looking at the chart, and he really came in right at the lows on a 2-year chart of GameStop and waited. So maybe he was like, all right, well, now the valuation makes sense again and got in.
Look
but yeah,
at the price action before the tweets. Look at the price action, Dennis. This thing is dead. Look at the previous 1, 2, 3, 4, 5 days before the tweet. It had a flat day that day.
We can say that though, Joel, but I called that actually. That was Carvana. So I'm gonna say that's not conspiracy in there. That it was kind of starting to go up. A little bit of conspiracy. I'm sure there was some accumulation happening here by the privileged people who knew when he was going to tweet. But I still think that a lot of that had to do with Carvana. We called it that day. So on this show, if you rewind the tape, GME was $11.50. And I said, look out on a stock like GME because it could get a lift off Carvana. That day, GME started lifting. And then the next day, it started lifting there too. So we know Carvana and GME have been linked because of the high short interest back in the day. There's no real fundamental relationship, but you could tell that it was going to go. Yes, rewind the show. I did call that, and I don't think that was all conspiracy in there. I think it was Carvana lifting it, but that kind of started it. And maybe Roaring Kitty was looking for something just to get it. Momentum was starting to go on his side, so he wasn't just facing just this relentless sell. So he did the tweet at the perfect time. There was actually people who had traded 20 before that. And again, there may have been some accumulation, by select privileged players. But, we don't know any of that. We probably never will. But a lot of that first initial move was probably Carvana.
The Carvana was on May 2nd. The big jump was on May 2nd.
And Jamie jumped that day.
Yep. Did it? So let's look at
exact day. Yeah.
Yep.
Yeah, I called it, Joel. It was Carvana.
No. I'm just looking. I'm looking at it. Yep, it was up the next 1, 2, 3, 4 days or
Carvana started the short squeeze here, or the accumulation. The story started to get hot again. Okay. And then Roaring Kitty came out, and that was one tweet, which is unbelievable. I mean, I tweeted last night too. Interesting. If you follow the Mr. Zach Morris, did you know that Mr. Zach Morris tweeted that exact meme 5 days earlier? Did you know that?
Oh wow! So they must have had some sort of communication.
No, I
or Roaring Kitty's a huge Mr. Zach Morris fan and just saw the tweet and then said, "Oh, that's cool. I'm going to tweet that too." That
you know what? We're losing our audience here. Why
are we losing the audience here? This is
because they're like, "Oh, this is old Benzinga. This is like."
There's one person saying that. I think a lot of people like it when we're obviously pointing out different things here. But I find it very interesting that Mr. Zach Morris, if you go and look. 5 days before the Roaring Kitty, he tweeted that sit up meme. He tweeted it for AMC though. Obviously, Roaring Kitty just tweeted with no ticker whatsoever, and everybody assumed it was GME. Both stocks went. So, I think there could be the possibility Roaring Kitty's just looking at Mr. Zach Morris' feed. I mean, the guy's got 600,000 followers. So you might have saw the meme, like, oh, that's cool, I'm going to retweet that. But Mr. Zach Morris had that 5 days earlier, that actual meme tweet. Very interesting. Very
Very
interesting.
interesting.
Coincidental, possible. Was he a follower? Possible. You draw your own conclusions on that. Very interesting.
All right. Well, should we talk about these PPI revisions yesterday? I mean, we saw the number come in hot yesterday at 8:30. Then the market started ripping. We were like, what's going on? Why is the market ripping on a hot PPI number, especially right ahead of today's inflation report? So there was a revision for March's PPI. So they went from going from a positive 0.2% and revised it down to negative 0.1%. So the producer price index actually fell in March again. So that explains why you got the bigger pop up in April. The market liked it. I'm still surprised by the move, though, that the market was saying, okay, we're gonna pop on this number from the previous month and ignore the number from the most previous month. So we're going back to March now instead of April. It's like if a company reported earnings and then said the last quarter was actually different and the market started moving it based off the last quarter. But that's what happened yesterday when we got the pop. And then today we do have, of course, CPI coming out at 8:30. The expectations are for CPI in April to come in at 0.4%. That is 0.1% higher than the 0.3 we got in March. CPI year over year is actually expected to fall, though, to 3.4% from 3.5%. Core CPI expected to fall as well to 0.3%. So, I mean, the bar here is set. And I'm worried about the market if we come in hot on the CPI number, especially after.
You know what?
Yesterday.
I always worry about the market, but just like this crude, I mean, I don't know. Crude's part of the PPI. And I don't know if I'm putting too much emphasis on it, but I'm just thinking it's just a big component and it affects a lot of other things. Like when Dennis is driving to his McDonald's, okay, if he has to pay, a buck more for gas, I mean, it affects a lot. It affects a lot of the transportation companies. So maybe I'm too focused on crude. But I mean, what if those numbers were taken when crude was at $90? Didn't they get this almost to 90? But you know what? This is
They
not.
account for that. They can, like, the estimates.
Yeah.
That's an easy one to predict. So those estimates are in there for that. So I wouldn't worry too much about the crude impact here. That's why you see and again it's all crude's very inflationary, and then on the core they got it and then they take it out for the revisions because it's 2, and it's the numbers are all bogus anyways. We know that, but that's all we got. AB said that before. You got to follow the bogus numbers, the bogus made up numbers, and they really are. But obviously Blue's going to come on. He's not going to like us saying that because he goes with those numbers. But I mean, they're made up. I mean, we know inflation has been a hell of a lot higher than 2% even in the last year. You can go to the store and see it. But they take out everything inflationary, half the stuff there. So we know the real numbers cooking 7 or 8%. We've seen the statistics, that if we calculated the CPI like they did 30 years ago, that we'd be running 6 to 7 ticks higher. But that's all we got is bogus numbers.
It's kind of like the Dow Jones, right? Like, oh, this stock's not doing good. Let's take it out. Let's put something else in.
Well, it works. It keeps the Dow going higher.
Yeah,
Joel, though, so question for you, and I think it's important here. You were talking about, I just want to expand on this. So, AB was starting to say it, but we had the sell-off yesterday on the PPI initially because the headline number was hot, but then they did the revision to March, and that showed that it wasn't as hot as we thought before. They got to revise the bloody numbers in the past. So what does that mean for today with CPI? Like, I mean, are they going to be, the revision popped us yesterday. Are they going to be looking at the headline?
Careful. I don't know. I wouldn't.
It's going to be a tough number to trade.
Yeah, this is a tough because I mean, it's just like if you're blindly buying the dip here, I just don't have a good out. I mean, you had a big move up. You made a new high of the move, former high of the move. I mean, I wouldn't let it go past 64, and that's 6 handles away. They could go 64 to 34, and back. I don't know. You're never going to get to say. I don't know. Just like the meme trade, you don't know if it's going to play out the same way every time, right? And I don't know. I'd be more anxious to sell a pop than I would buy a drop on this number. But we'll see. We'll see what the revisions are. I didn't jump the gun too much yesterday. I'm glad I didn't, and I will have the same calm, cool, and collected manner today.
One thing, Joel, you mentioned the historical sports references. I mean, the revision kind of reminded me of. You might know this, but I doubt a lot of people do. Do you know in like I think it was 2007, a committee in Maryland got together and revised Secretariat's score or race time from the 1970s. I don't know how you do that. Come back, they lowered his time from 40 years after. And there's a lot of conspiracy. I mean, it got reignited on a podcast recently where someone was basically like, I think all these Secretariat numbers are BS, that every other sport, we've gotten faster and the records have been broken. And this one horse from 1970, still hasn't been broken. So, that revision reminded me of that.
Did they revise it up?
No, down. They said he was actually faster than what they said in 1970.
Wow.
I don't know about that one. The clock is the clock. So
right. That's what I'm saying. How do you get together 47 years later and say, oh,
so
no,
like whoever's using a stopwatch in 1970 click it fast enough.
Yeah, exactly.
That's all they used to do. Remember, I'd be running track and field, and I'm like, I won, but the stopwatch, they one kid on one stopwatch, one kid on the other stopwatch. And they're like, no, the stopwatch shows that you lost. I'm like, we didn't click it fast enough. I could clearly see I won.
Yeah,
come on. That's one good thing about like when I compete in swimming and stuff. They have the big board up there, and like you touch, if you hit the pad correctly.
It's electronic.
You look up and you're like, oh, then you take your goggles off, and you throw them against the block or something, or you do a little bit of flex or something like that. But
2 minutes, 2 minutes, 2
minutes till the CPI data again. I gave you the preview numbers there, but it's a little bit of a mixed bag because the actual CPI for April is expected to go up 0.1% from March, but then the CPI year over year is expected to fall. So if we do get all numbers in line, I'm curious how like the media will be reporting it. Will it be reported as like inflation fell because the year over year went down, or will it be that inflation went up because the month over month went up? I don't know, but again, the core CPI and CPI year over year is expected to fall, whereas the actual CPI for April is expected to be 0.1% higher than it was for March. So,
a very more important question, and we're going to bring Blue out here in a minute. Dennis, what events did you do in track and field?
Joel, so you were the anti-athlete. I was skinny, so I could run pretty good. I couldn't do any fur jumping, and I always joke at myself, I was not an athlete there, but I could long distance run pretty good because I was small and skinny. I was like 65 pounds, I think I was like 80 pounds going into high school, like maybe even less than that, like 70 pounds. I was a little guy.
That's a
so
trip.
before I, metabolism slowed down, I put on the 150 extra pounds that I'm carrying now, but I could have run pretty good when I was in school.
All right, Dennis, we're going to let you go. And Blue, I see you in the background, Blue. Can we bring you on a minute or two early here? Okay, let's bring him on. You got the intro real quick?
Yes, sir. Let's go ahead and bring on Mr. Blue Putnam to help us break down the CPI number.
If you guys don't know him already, he's Blue Putnam, former director of the economics at the CME. Blue, I get a little excited here on the number, so let me get through the number here. I won't yell. Might want to turn your volume down a little bit. We're ready for a wild one here. We're chopping around pretty good. We're moments away here. Get April retail sales too, folks. Don't forget about that. Pre-market high stands at 77.50. We had a hot number yesterday, and they bought the dip. We'll see what they do here. We're moving around pretty good here, and it's light. They love it. They absolutely love this number. We just popped to 52.94. Look at that. I don't know what the revisions are. But, folks, the Bulls are in control once again. We just hit 52.94. Do we hear 5,300?
So
5,300 prints. What do you got for me?
We had CPI year over year came in at 3.4%. That was in line with expectations. Again, that was the 0.1% drop that we were looking for from 3.5% CPI year over year. Retail sales month over month for March came in at 0.0% versus 0.4% estimated, 0.6% prior. Core CPI year over year came in at 3.6%, which was in line with estimates. The CPI itself for April came in at 0.3% versus the 0.4% estimated. It was, again, 0.4% prior. So we actually had the month over month drop and the year over year drop, which is, so again, it wasn't light by, a lot, but it was light and in line with expectations here.
All right, Blue, here we are once again working our way back down. You gave me some great information. What I want to do is I want to run through your presentation real quick. Well, first, let's get your initial thoughts. Let's go through your presentation, and then we'll see what kind of questions the chat has as we are ripping no resistance in the market, Blue. What's your initial reaction?
Well, this, is close enough to expectations, certainly in line with the inflation stuck around 3%. It doesn't tell you it's headed toward 2%. But the little bit of upward momentum in the first couple of months of the year seems to have dissipated. By the way, that was probably seasonal adjustment confusion, let's say. The pandemic really messed up seasonal adjustment, so it's so it gives a little upward bias to the first couple of months of the CPI, and that seems to be dissipating. So, but this is a 3% kind of territory. It's not 2%.
Okay, let's just go for the expectations of the Fed funds rate here. Let's go to the end of the year here, because we were talking about the Fed pivot and lower interest rates here. Where are we at for rate cuts in 2024?
Well, there's the current market has 1 or 2 cuts by the end of the year. This data will support that. But it's definitely not going to be 4 or 5 cuts. The Fed's going to wait. They're not going to do anything at the next meeting. This is definitely not convincing of that. So it'll be later on in the year. And the market's in pretty good shape, I think.
Okay. All right. So 1 to 2 cuts. This supports what Mr. Powell's been telling us. Let's move on to the next side here. Pretty much going around the same thing. The way the expectations have changed. I mean, going to flatten out here? Are those blue and black line to converge, or going to continue to move farther?
We're gonna stay with the blue line. We'll get a little more optimistic on this number, but the debate within the Fed is, do you wait for 2%, or are you okay with progress made toward 3%? And, they haven't been very clear on that, but Jay Powell seems to say we've made enough progress to do at least 1 cut this year.
All right. Now they give you numbers, they give you other numbers, and they say, no, the government focuses more on PCE core inflation compared to the Fed funds rate. I know we get to PCE later. I mean, these things seem to follow each other pretty closely, right? Like, we're not going to get kicked in the face by the PCE number now, are we?
No, and in fact, the PCE over the last 50 or 60 years has been slightly lower than the headline CPI. That doesn't mean anything for this month, of course, but you're exactly right. They track each other. And, the Fed's pretty much committed now to a new era of keeping the Fed funds above the PCE core, and they just have to decide, how far above.
Okay. All right. This is pretty much the Taylor rule. Are you talking? I didn't know you were a Taylor Swift fan.
No, definitely not. I'm not in that generation. But I do follow Professor Taylor.
You do like somebody. Who'd you go see in New York a couple of weeks? Was that a play, or was that you did see something? You and your wife?
Well, we do go. We went to Vegas and saw U2 at the Sphere, and then we went up to New York and saw the SNL folks. So we do different things.
Oh man. Okay, back to the Taylor rule. James Taylor.
Yes. Yeah, the Taylor rule just says, the Fed has got a dual mandate. They got to trade off unemployment and inflation, and there's a highly debatable formula about the Taylor rule. This is my interpretation, but it's pretty much in line with everybody else's. And if you follow the Taylor rule, you'd cut rates.
Okay. All right. Let's get him on the replacing Powell here immediately. Okay. 6-month annual percentage
Yeah,
change. We came down fast, and it
Joel,
Yeah.
just
before you
helped
go,
the
I just
market.
listen to that. I'm listening in the background. Why? Like, why cut rates? Taylor will explain this to us here, because just taking it at face value, I want to get Blue, because Blue's smart. He's smarter than me. I want to listen to what he's got to say. Why Blue? Why does the
I
Taylor
don't know
rule
about
say that?
that, but so the Taylor rule basically takes unemployment at its kind of trend rate, and it says, look, so on unemployment, we're kind of checking the box. We're not going up, we're not going down. It's not a big impact right now. And then you look at inflation, you say, well, inflation's come down a lot and it's below the federal funds rate. So, the Taylor rule says, okay, sure, the unemployment rate's low, but inflation's come back down well below Fed funds. Let's cut rates.
Okay, so that's where. So okay. So let's just say we cut rates. What happens? And again, and maybe the market. This is what the market wants to see. Maybe this is what a lot of people want to see. What happens though? Like, why should the Fed do this? Because what if inflation does start ticking higher? I mean, the economy's humming along. The S&Ps are at all-time highs. Why, start cutting rates just for the sake of cutting rates?
Well, you actually make a pretty good point there. So you're smarter than you think. But the thing is, the U.S. economy is not nearly as rate sensitive as it used to be back in the 50s, 60s, 70s. So it probably doesn't make a lot of difference as whether the Fed funds rate is 5.33 or whether it's 4.5. Those are not going to change that many investment decisions. They're not going to change consumption. I mean, if people, if personal consumption, they pay credit card rates or home equity rate, they're way higher than the Fed funds rate. So the Fed doesn't have a compelling reason to cut rates. What the market, I think, really would like, and what most economists prefer, is stability. And the Fed funds rate is at a pretty good historical premium above the prevailing inflation rate. I'm just going to say prevailing inflation is 3.5. That gives me on the high side of some of the PCE core numbers, but it's not 2, and it's not 4, and it's not 5. It's somewhere in the 3s. So if you've got Fed funds at 5 plus, you've got room to do a little bit of cutting if you want to do it. But I agree with you, Dennis. It's not going to have a big impact. And if you're a market trader, if you're a day trader, you'll get a pop. But if you're a long-term trader, it's probably not a huge deal.
So, Blue, and I guess, correct me if I'm wrong, but if you're in the camp that the Fed would be able to cut rates here with inflation above its 2% target rate, then I guess you would have to believe that, the low interest rates weren't what was driving up inflation. So then what is, and then how do you remedy that? How do you fix it if it's not just as simple as, okay, raise interest rates to bring, inflation down to 2%?
Well, you ask a lot of questions in one question.
So what?
Okay.
I'll make it simpler. Are interest rates would bringing interest rates down, not make inflation go, bring inflation higher? And then B, how do you fix it?
Okay, so if they cut interest rates from where they are now by, say, 2 cuts, get below 5%, 4.75, something like that. That's not going to affect inflation, future inflation at all. It's not going to affect the economy much at all. We're just not that sensitive to a small cut like that. If they were to raise interest rates, 6%, 7%, they could really slow things down. That could still work. But they're not going to do that because, what caused this inflation, man? We had huge fiscal stimulus in the pandemic. We got a surge in inflation. The Fed supported it with 0 rates and quantitative easing. And then we had supply chain issues. Every one of those things has gone away. Okay? So there's no danger of going back to 6 or 7% inflation. Could it tick up to 4? Sure. Could it tick down to 2? Yeah, that's possible. But I'm in the camp that it stays more in the 3s because I don't think people appreciate how much globalization kept inflation down. That I'm talking about 1994 to 2019 or 18. We're out of globalization, man. We're putting tariffs on stuff. We're using protectionism. People are changing their supply chains to be more resilient. That's going to cost money. We're not going to go back to 2%. I don't think so. But we're at 3, and I'm not worried about 5 or 6.
If there's a bugaboo in all these numbers, and let me know if you want to go to any particular chart here. But you talk a lot about housing pricing and shelter inflation. I mean, that's still looking like it's moving right in the right direction.
Yes, housing and shelter inflation is coming down. It's just coming down slower than any other component. And it really matters for the CPI. The total amount of shelter in the CPI is about 1/3. And of that, in the CPI, 25% is this thing called owner equivalent rent, which is a mess. But, the point is that shelter, the way they measure it, it's lagged, but it's coming down. And, why should you hold the economy hostage to one component that you already know is going in the right direction? So that would be my question for the Fed.
What about I want more money? What about wage inflation? People, hey, your companies are doing good. They're beating earnings. The pandemic changed. And it was an interesting point you made about filtering through the pandemic into supply chains. What about wage inflation? You saw that, when it peaked and then the trough here. Are we just going to get into one of these 2010 through 2016, 17 patterns? Or do you think people are going to start wanting some more money?
Well, I definitely want more money. So I'm with you. But I think we're in I expect this data to hover around the 4% zone. If inflation's 3%, we've got pretty good increases in productivity. We got the economy's growing. But this data, this is the hourly earnings data chart you're showing. It is it's weighted by the type of worker. So if you have more low-income workers, your servers at the restaurant, things like that, hotel workers, tourist industry workers, if they grow faster than any other segment, the index is coming down and nothing's happening. So this is not the greatest index. Unfortunately, people look at it. So I look at if the Fed looks at it, I look at it. But I don't think you should.
Okay, good. And then just back to the core PC inflation, the Fed's favorite target. I mean, things look, look good, but that looks like that 2%. It was a breakout above 2%. I'm not going to look at this too technically. I mean, I agree with you too. I mean, what the Fed did at the end of last year caught a lot of people off guard with the Fed pivot. I really thought the Fed pivot was when they're going to say, you know what, we're giving up on 2%, 2.5%. So talk about core PC inflation, the Fed's favorite target, and you mentioned it a couple different times. Or is that going to be the next big pivot from the Fed?
Well, Jay Powell is not going to go away from 2%. What I hope Jay Powell will do, but I have no idea, is that he will say, we've made enough progress, we can do 1 or 2 cuts. But if you're waiting for 2%, you're waiting for Godot. He's not coming, and he's not coming because the world has changed. Pax Americana is dead. You can't put your factories just anywhere in the world. You've got to have more than a huge mistake not to understand the context and how it can change. I don't want to, let me be a little careful. It's really hard to do what I just said. But, demographics change, globalization changes. These are important long-term factors. And if they're not in some way involved in your modeling, you're going to get it wrong. And the Fed's pretty much gotten it wrong.
Yeah, and I mean, Blue, the Biden administration just announced new tariffs on China. I believe it was yesterday. I mean, that sounds like something the administration wouldn't have done had it been as worried about inflation as as it was, say, a year and a half ago when we saw inflation at 40-year highs. Do you think they're saying, okay, we can start doing some of these tariffs now because inflation has fallen, or do you think that will have no impact whatsoever on inflation?
Well, the particular new tariffs are all about EV cars, the
Right.
electronic vehicles. How many Chinese electronic vehicles or how many do they sell in the U.S.? Okay, virtually none.
None. Yeah.
So this is a no impact
Well,
tariff.
but
It's
somewhere on some of the
100%
metals.
about politics.
Okay. I mean, I thought it applied to just like overall, aluminum and steel and stuff as well, not just as it relates to EVs, but I think, it was primarily, targeting Chinese EVs. I was just curious because it sounds like implementing new tariffs is something that you wouldn't do again if you were that worried about inflation.
If inflation was your primary objective, you certainly wouldn't be putting on tariffs. They raise inflation, no question about it. Consumers end up paying. Companies may absorb some of it in the short run. Certain countries may absorb some of it in the short run, but at the end of the day, it's higher prices. But this change on tariffs on electronic vehicle, that's not going to be a big deal.
Got it.
Um,
What about, I mean, just looking at the health of the overall economy right now, Blue? I mean, we're doing a lot better than I think a lot of economists would have thought with where the interest rates have been for the last, year or so. What about people that would say, though, that like, you have the big tech companies and earnings from those companies really driving the boat in terms of economic growth right now, and that for like the average American consumer, things aren't really as good as they're making them out to be for the economy?
well, my take on the consumer is if you still have your job, you're still spending money. Uh, when you lose your job, or when some of your relatives lose their job, or maybe their neighbors lose their job, you get a little scared. That's not happening right now.
Right.
But I will tell you that the overall mood is that everybody's still worried about their jobs. We're all worried about the economy. This is we got a war in Europe. We got a war in the Middle East. We got, big changes in the technology sector. I don't blame people for being nervous about their jobs, but they still have them. And so personal consumption is going along just fine. We're basically a 2 to 2.5% real GDP economy. Now, it was underneath that in the first quarter. It's probably going to be a little above that in the second quarter, but it's just bouncing around that kind of number. So we're okay right now.
All right, we're going to wrap things up. That was an extensive look at the inflation picture with none other than Blue Putnam, former economist at the CME Group. Blue, great interpretation. You keep me in line here with the economics. We really appreciate you having you on, and when we'll dial you up again, that'll be next month, just around the same time. Thanks, Blue.
Thank
Thank you, Blue.
you.
Have a great day.
Thanks,
All
Blue.
right, guys. Again,
Go
that
ahead,
was
Triple
Blue
D.
Putnam. GME has just absolutely fallen off a cliff. It is now-
What's going on? Something happened here because AMC and GME. So the market took the big leg up. These things just imploded even farther. So I mean, they're bouncing around a lot, though. GME is down 15%. It was down 9 when we were talking about it earlier. So you've had another fall here in the meme stock trade. I know it's not a GME show, but that's the stock that's trading the last couple of days. It's what everybody is talking about. So it's
Is
on
there
your
any
watch list for right
news?
now.
No,
I
I,
looked. I didn't see
no,
anything jump.
I think it's just, you take the
People
elevator
panicking
down. I
now.
mean, people, panic selling. I mean,
Panic selling.
and it's still early, so I mean, maybe a lot of people are still like waking up. I mean, people in the West Coast, it's only 5:50 a.m. there, so maybe they might wake up, see, oh my God, GameStop's down this much, I gotta sell now too. So again, I'm worried about this story because I think once people kind of start rushing out the door, then it becomes a big, almost a mob to see who can get out quickest.
You
Yeah,
know what?
maybe that's
You,
it. What's up, Joel?
I'm just thinking, what time do the margin departments get into full swing?
Well,
Or
they're
there is?
usually, if you're in a good brokerage, those things can be running a lot more than you think. Like it depends where you're at, but I mean, if you're going in, like some of these things are running like all around the clock, I think, Joel, because there's after
Okay.
hours trading and stuff now. So I don't work at a brokerage, but I think if they're only operating from 9:30 to 4,
Well,
that's
I'm
an
just
issue.
saying. I'm just saying maybe someone got triggered, and because there were so many hodlers out there. Like, did you see it
Uh,
all over Twitter? Like,
it
I'm
feels like it
buying
was
this
a
stuff.
headline or somebody said something. It feels like something, anyways, because we dropped another 7%. You'd think when the market just rips up 30 handles that wouldn't cause another 8% fall in GameStop and AMC, but maybe these things move opposite. But in any regard, here we can clearly see, there is panic selling here now. Do they bounce here? They're going to be bounces. There's going to be bounces. Is the stock going back to 80? GME, I don't think so. I don't think it's going back to 70. I don't think it's going back to 60. I think, bounces are going to get sold now because people are new bag holders are getting formed here. So I think I'd be selling into rallies, but right now it's hard to say. There is other news here though, stuff breaking Netflix. We've got news just breaking on Netflix here, and it is lifting up 9 points here right
Who?
now. I'm trying to grab the headline here if we
I'll grab
have
it
it
real
yet.
quick.
It's just breaking here. I just got it from my friend over at Bray Trading. I actually just said Netflix's news right now. So, and I see it popping $9, so something's up. I don't see the headline here just yet, but we'll get it.
Netflix nears deal for NFL games, extending push
There you
into
go.
sports.
Yeah, so they're moving into sports. I mean, this is turning into a sports show.
And
We're
we gotta
talking
do
sports
sports.
again here.
We gotta do Dennis. We have missed our call. We got AB, who's a sports guy. What are we doing? You could talk hockey. I could talk just about any sport, even horse racing.
We got the
car
sport. We're
racing.
going to do a sports. It's going to be, we're going to do the
Sports.
8 a.m. pre-market prep, maybe the 9 a.m. sports show.
Well,
Or
guys,
9:30 or whatever. We won't compete.
You know what this means, which this could be our opportunity, is that Netflix is going to need to hire someone to do the broadcasting and the show.
I'm sure Benzinga loves us saying that.
So we could pitch that. Well, we could make it like a Benzinga Netflix.
Yeah. A collaboration.
We could at least pitch them to let us do the.
Before you get us fired here, AB.
we could at least pitch Netflix to let us do like the pregame show, and we'll say, hey, we'll talk about your stock too. We'll talk about Netflix's stock.
Yeah. We'll do the stock and then the stock and jock on Netflix.
Yeah.
I'm telling you, if Netflix gets sports, I'm cutting the cord. So the only reason I keep my cable is mainly because I don't like being 30. I don't want, I'm subscribing to all the sports. I got the sports channels and stuff. We don't have it on Netflix. So I'm all for Netflix getting the sports. I mean, if I can get everything, and cut that cord and cut that $60 or $70 cable bill a month and have my sports on Netflix, I mean, that's awesome. So I think this is what they have to do. This is why Netflix is so much better run than Disney. When originally Disney Plus came out, I thought Disney Plus was going to give Netflix a run for their money. And the only thing Disney has is the Star Wars stuff. And it's not even that Ahsoka one. It's not even that great. But I mean, Netflix just, operating and firing on all cylinders all the time. So well run. Everything here. The stock has come back. It's not that far from all-time highs. It's a little ways away here. $700. So we're only $80 off here now. Does this kickstart Netflix talk technicals here, Joel? NFL
no,
action.
it's not that far off all-time high here for Netflix.
700.
We just ticked 620.
Yeah, $80.
Good job, Dennis. I did not
I can read a chart.
I did not look at my monthly. Holy mackerel! You know what? I got. I'll just give
Ackman
you.
sold the bottom, by the way.
He did.
Pretty much the exact bottom.
You know what? This 620. I know we're trading at it above it right now, but you did have a little bit of congestion at the 621 area. That's not much. But there's another. You have to do this with the higher price stock too. I'd say my next key area, just based on today's price action, would be 631.50 and a half, because that splits two highs from April 12th and April 15th. But I want to ask you the chat a question, and maybe you guys a question, because I can't get the Tigers anymore, right? Because of Bally Sports Entertainment.
Yeah, so they're having the fight with the contract.
But they said when I called in, because I called to complain the other day, because I lost my internet for like 30 seconds. I'm sure you guys all noticed on Monday, and I blamed it on my generator guy. So then I called Comcast to find out, did you have a problem in the area? And they said,
Oh yeah, for
no,
sure.
we
Yeah.
didn't. So I'm still not blaming the generator guy. But they basically said that on the Comcast call, they said that I should check out Fubo if I wanted the Tigers broadcast. Is there anybody in the Detroit area that has Fubo they can get the
Blast from the
Tigers?
past, Fubo.
Yeah. And I have no position in the stock. I never will have a position in the stock. I just like
I had a
watching
position in
Tiger
it
games.
yesterday, Fubo. I thought it was going to meme away, but it didn't meme away. It didn't really go up much at all. It did a little bit, but I thought it was going to get more of a lift.
Oh, Wiss has got a free site you can watch any MLB game on. Send that to
Too much
Joel.
sports side. They're going to all leave. Still half of our audience. We have a non-stop sports here today. And we didn't even talk to basketball games. 3 minutes left here.
Focus,
3 minutes
Dennis,
left
focus.
here. Yeah, I mean, we had a couple earnings reports. We really didn't cover them. Monday.com's up $35 if you want to cover Monday.com. I don't know how Tuesday or Wednesday are doing. How's Monday doing?
Boom, boom, boom. Big
I was going to get AB.
here.
Let's get the numbers before the technical.
Go ahead,
Follow our
AB.
script.
Yeah,
quiet
so
today.
Monday reported EPS of 61 cents, beat the 40-cent estimate. Sales came in at about 217 million, beat the 210.5 million estimate. Expects total revenue. Looks like their guidance came in on the higher side of expectations. So stock traded up 20% this morning. I think Monday.com might have some like different brands under its umbrella that we use here at Benzinga, but I'm not too familiar with like the actual Monday.com site or services. So I won't speak to it too much outside of just those numbers.
Nice pop, just wallowing at the low of the move. If your target was 222.29, well, you missed it because that's what it hit in the pre-market. Nothing, but you're right back up here, folks. I mean, you're right back up here after just wallowing at 180, 185. So I'll make 220, 222 up to that pre-market high. I'd make that a 4-star area if it was your target. If it's not your target and you think it's going back like to 450, then forget what I say. But that's just a short-term technical trading at the 220 area in Monday.com. 2 minutes left here on this really great show today. I mean, I think it's been a lot of fun. But Dennis, we never got
earnings.
to the
Earnings tonight. Cisco is the big one on deck here. Give us a preview here from the technicals for Cisco, Joel. We've come back. We're basically just in the middle of nowhere here on the charts here. But give us your thoughts here going into the report here, because everybody will be watching Cisco tonight. It's the big one.
Man, I wish I would have listened to myself when I said if it filled the gap off this earnings report, I was going to lighten up. But I guess I didn't look at that
you're long
chart.
still.
Yeah, I don't know, from like 100 years ago. I don't know. I mean, a big thick. Now, but this thing can really move on earnings.
$2.30 is the expected move. $2.
That's what I'd use. I'd use that because it's a thick show. I'd say if this catches a wicked 50 bid, then look out, Loretta, because you got nothing between 50 and 52. On the downside here, if you thought you missed the move here at 46.60, you give it some back 49. Maybe this 47.5, 48 area. I do see a pair of lows at the 47.70 area. Dennis, 1 minute left here in today's show, and I'll preview tomorrow. The price action during that number. I mean, it was just straight. There was no downtick. Was it?
No, straight up all the way. They were nervous after yesterday's number, and then obviously, coming in here not hot, and it was straight up all the way. TLT is your lie detector test. It is rallying here as well, up over 1%, which is a huge move for the TLT. Coming back from the ditches, we're down there at 87. Everybody's like, here we go again. We're going back to, like they're talking 6%. They're talking long term. Well, you know what? We've come back up here now. So, now you're coming from the area where it started to break down. So I think if you're chasing the TLT here, I think you're doing it backwards. I actually might sell some into this rally here, the TLT. But, with that being said, it's the lie detector test for the market. TLT is strong. Expect IWM to outperform SPY, which we are clearly seeing here in the pre-market. IWM has quietly come back to the highs here too.
Look at
so
that. I know.
You know what? You want to sell the highs. If you want to sell the highs, you're back.
There you go. All right, guys. Well, it is 9 a.m. That will be a wrap for us today on Pre-Market Prep. Please smash the like if you have not already. We do have live trading starting right after this. Joel, who do we got coming on with us tomorrow?
Anne-Marie.
Anne-Marie, she's in
Band.
the
Yeah.
chat.
Yeah.
Anne-Marie.
A cheerful voice as opposed to our scratchy sports talking voices. So we'll have Anne-Marie on tomorrow. We'll get an update from her on the market. So fun show today, guys. Be careful out there. Once again, PYC, preserve your capital so you can afford to listen to tomorrow's show.
Beautiful. All right, guys, stay green. We'll be back tomorrow. Smash the like if you haven't already. We'll see you guys 8 a.m.